Good evening all, hope you're doing well. We had the FOMC just 14 minutes ago. We can see that on the price performance is that we're seeing quite a little bit of poor performance from the Aussie, and the dollar's doing okay. The New Zealand dollar is trying to turn around today, but we've had like a poor week. Some strength in the pound, you'll note, and the euro is pretty negative, but not as negative as Aussie. So I think what will probably happen is that if we come to the bubble, we should see that bubble be moving. Yeah. So if you remember at the start of the week, the Aussie bubble was down here. It came and raided all the stops, and then that action of them exiting en masse, it moves the bubbles, and then we have negative price performance because this is bullish, this is bearish. Okay, so it should be really simple to understand. Is that if the bubble goes this way, they're selling it, so it perform okay. If it comes this way, they're buying it, and so the bubble, the currency can perform poorly. So that's how that works. So it's possible still going to get the pound USD scenario. Note that we've got a strong USD, and we've got a weak Aussie. Potentially we're going to have a weak gold. So if you're trading gold, be aware that we may gravitate up here, which is the strong sell section. Dollar Swiss also could be a setup as well, and that's actually had confirmation using the FXCM trading station. If we come to the risk calc and we come to Wednesday, see we've got a bit of green in dollar Swiss. Okay, so that's of note. Also, we are in a state of fear. Because of that, the dollar is going to do okay. It's going to perform quite well. So now the thing is, yesterday we had a negative, well, a positive 24-hour change. In so much as this telling us their herd are going positive, they're buying. Because if they buy, we should see price fall. Okay, so that's how that works. It's incredibly cruel, but it is what it is. And the technicals have got zero score. VIX is really going for it. The Treasury yield, the 10-year, is just sitting on the fence, but the indices are falling, individual stocks are falling, and the dollar is up, is positive. So we are going risk off, and because of that, we're in a state of fear. Okay, and because of that, we're probably going to see some continuation, like I said on yesterday's video, with the fundamental context of the the direction of particular currency pairs. So the Aussie, for example, will suffer. If we're in a state of fear, people aren't going to invest in the Australian dollar. They'd rather put it in the US dollar because it's regarded as a safe haven. So it's now, with any luck, we'll see some continuation, and we're not going to see some chop. Okay, so we should hopefully see a stronger dollar going into the end of the week, hopefully, and we don't see flip-flop, because it's quite hard to try and make money when things are going to flip in the space of a day. You know, you want to hold and you want to maximize your profit, at least in the day. But if it's going to flip in a single day, it's very hard to profit. So with any luck, we'll see some continuation on the USD. That being said, pounds, you know, they shorted the pound, but they also shorted the USD, as we can see. Okay, probably that's it from a spreadsheet view, I think. And then we come to the indices. Now, the thing is, with the indices, is that they'd gone long at 11 o'clock in the morning. So well before the FOMC. That's 8 hours prior. So they'd actually tried to buy. Initially, they got paid, and now they've got quite squished. Now, it will all depend what happens here. If they try and buy this dip, that will push this sentiment higher, and then we'll get closer to 50%. See, that did tick higher. So if you've got the trading station, you can just watch that number, and if the number increases, it gets higher. It tells us that the herd are buying. If they buy, then this is going to continue to fall, and then that's how you can use it. It's really powerful. So they jumped the gun, basically. They'd gone long hours and hours before the risk event. And don't forget, tomorrow we've got some PMI data as well. It's quite a high risk severity day tomorrow. Lots of red folder events. So high severity risk events. DAX and had fallen, so they'd jumped the gun. They brought it up here. In a way, it kind of makes sense that they might, because it actually is quite strong if you zoom out massively. But whatever they do, they're going to get punished. But they did happen to buy at that point, and they've got quite crushed. It's quite a move, and we could definitely do with a breather as well. I don't think we should be up here personally, and this is just a sentimental uh, driven trade, and it's actually come up to squeeze the apes because there's too many stubborn traders, retail traders, in the market. And so this is what I think has probably happened. When you think about, there's 500, well, maybe 100 million retail traders. I'm not sure how many there are, but there's going to be a lot, and each of them have got fairly sizable accounts. That is a lot of money, especially if they're trading without stops. So that, if there's going to be an entity to fade and reverse those retail traders, it's going to cause skew. So I think getting them out of the equation is going to be good for the market. Okay, and we'll get some normal semblance of market dynamics as well. So what's happening here is that they are selling it, and of course, by selling it against the moving average, it's going to create a buy. So it could be a little bit boring. So if you're trading DAX, do have a heads up now, is that we are possibly going to make a buy. They would have to, yeah, because they're probably going to wick, I think. So it's going to be quite frustrating. They sold it, so admittedly they've gone long up here, but then they've got punished. You could probably argue that's a sufficient move for the retail traders to potentially to be stopped out, and we are very, very skewed as well. We could probably overlook the sentiment and just fall anyway. But if that number is going to suggest that we're going to get a crossover, the crossover is incredibly reliable. Look at that one. Then we had one here. Up we go. They sold, so they kind of got paid a bit. They sold again. Sort of got paid a little bit, but then it went to their break even, and then they'd sold. Up we come, and then they went long. And that's the current situation. That's the last crossover. So we can draw a box there, here. Okay. We'll look at gold, and then we'll wrap up the video. And at least it's been an interesting day. At least like we're not seeing sideways stuff. It's just so boring. Now I think potentially what might happen, and we may get to sell, because we're getting quite close to 50% now, and especially if they're going to buy with this strength and this conviction, then we can potentially fall. So the last crossover we had was, yeah, this candle where they'd gone long up here. So that's the now going to be resistance, and that's today's video. So it's good in a way because we've seen some normal market stuff returning, in so much as that we're having a negative day, which is like perfectly normal. But it was like we weren't allowed to have negative days all of this year, so it's just like a bit weird. It's like it's a little bit fake. That was almost like they were afraid to have a negative day, or it's just really quite bizarre, and it was just very, very cruel. And I think it really did go up to punish a lot of the retail traders. This was, I think, another sentimental move as well. Look at this. Look, we can see when it made a buy. Back here, you can come back to my video. I would have done a video on that day suggesting a buy, because we'd gone into the buy territory. This move here would have probably got them. See that very, very strong few hours there. Quite bearish, to be honest. And that would have probably cemented them thinking, oh, we're going to really fall. And it trapped those guys, and we've come up since. So I think this move is sentimental based. And admittedly, you could argue it's coming up because of the fundamentals, but maybe not necessarily. I think it's probably to do with the sentiment. Look at that. We did have some geopolitics and stuff, so that probably did help. But I honestly, I think about 90% sure this is sentimental driven and it's just come up just to crush these guys, the retail traders. Up we come. So whether or not this is going to be a turning point, it will be if we go into over 50%, but we'll have to wait and see. Time will tell. And I was wary about this because of the nature of the move. It was very impulse, and it didn't look like completely legit. It just wanted to go up just to punish, really. So we'll have to wait and see what happens. This fall makes complete sense because of the crossover, and we've got a punishment box. Okay, trade safely. Get a copy of the trading station. Join us if you want to on the sheet. It should be quite useful. Remember what I was saying about the gold. If you are trading it, that may cross over into 50%. If it does, then that's going to marry the FXCM trading setup. Okay, and that's usually excellent, and these are very good. So if they two align and they say gold sell, it's going to be a little bit ominous for gold. And so just remember to trade safely. Tomorrow is the last video of the week, which I'll do a wrap up of the week, and maybe we can have an interesting close, going into the weekend. So hopefully we'll see some continuation and not just some horrible flip flop, and so we can't really maximize profits. And that just, no one wants that. If we see a bit of continuation, we can make some nice profits. So that's today's video, and I'll speak to you guys soon.